Will history repeat once again on markets? The last 30 times we've seen similar market structure into Thanksgiving, we've got ourselves a turkey wrap. But as we know, in 2023, things are different. And of course, today we'll be talking about the stats moving forward. Nvidia had one of its better blowout earnings history record profits, but at the same time, markets still chose to sell off after hours. But the real story came in what central banks are doing around the world. Today, we talk about the stats leading into interest rate cuts from other central bankers and whether the Fed will join them soon. How can we tell, and what does it mean for our portfolios? It looks like most of them are confused when we read the statement minutes, but really the most important thing is what's going on with this current high and miniature sell-off that we've seen on the S&P 500. We'll be talking Qs, US oil, and of course the biggest hedge in the world being the US dollar, and why this level matters so much for the bears. Join us as we cover stocks, commodities, and cryptos together. Well, welcome back everyone to the Daily Show. We'll be talking macro, lead indicators, and the hottest charts. If you like anything to do with markets, always remember to subscribe and smash that alert button. Let's talk about fear and greed, because we've seen a massive shift between fear, which was only a month ago and really only a few weeks ago, and now back into greediness. Are we in extreme greed yet? Well, it takes a little while for some of those indicators to hit, but certainly a lot of you are starting to say this is the wildest market you've ever seen. I always say go back to 2021, remember February, January, and March. They were absolutely insane times when you consider some of the businesses that were doing well. Just a quick reminder as well, we're launching our new VIP newsletter this week. If you want to join in, there's still a few spots available. All you need to do, links in the description down below. Free weekly newsletter, name, email, it's that simple. Let's move over now to some stats, because we need to talk about a lot of things today, including the charts later on and some of these big levels. This is the first one. At the Tuesday close, November 21, the Nasdaq was up 0.75% over the last week. Now, in general, this has given us what we call the turkey wrap, which is the Wednesday to Friday, Thanksgiving Day kind of concept. Over the last 50 years, if the prior week was positive, the two-day Nasdaq turkey wrap, which is Wednesday and Friday, was positive across the board with a gain on average of 1.03%. Now, it turns out the stats are literally 100% for this so far, but just remember, stats are stats, and it's just one thing we'll be considering in today's video. We mentioned the idea of central banks cutting. Now, I posted this over on our X account or Twitter, follow in the links in the description down below. And what you can see now for 2 months, and realistically almost 3 months, we've seen other central banks around the world starting to cut. Now, are they doing that out of the goodness of their heart? The simple answer is quite simply no, they are not. Generally, it means they've overdone something and they've got to start reversing that policy. You can see here global net central bank tightening has already started to be relaxed, and that's because they've gone a little bit too hard, too fast, and things are starting to break. And we've talked about that a little bit with the central bank injections, which we'll look at the indicator later on in today's video. Another thing I want to remind you of is that one of the major reasons we are still rallying higher has to do with how many bearish positions are out there in a lot of futures contracts. I've shared this over on our X account as well just recently, and it shows you that the SPY still has 64% bearish positions on it. However, the bullish positions over the last 24 hours have started to increase. Now, if we end up seeing bullish overtake bears, well, you know what that ends up doing. Usually the market will sell off pretty aggressively. And if you do see price action showing you that that sell should be coming, it's a great sign. Notice the FTSE has this incredible bullish position on it, and the DAX has an incredible bearish position on it. These guys have been getting squeezed, and these guys over here have been making zero profits because the FTSE has barely been moving in recent weeks. Let's move over now to why we need to know when the central banks, and more importantly, when the Fed has started to do its last hike. Now, I've mentioned this before and I'll mention it again. If we see the Fed pause again in December, that marks 5 months post-hike, the last hike that is. Now, that would suggest that it's done. The cycle is done, and that the next move they're going to do is a rate cut. The market's already pricing this in. They know the stats, of course, they're talking about it. I've got this chart again over on our X account. But I think what's most important here is that we generally don't get soft landings. Now, it's not impossible, and we'll look at the stats in a moment, but it is more than likely. 11 of the last 14 ended up in recession periods. And remember, recessions aren't actually good for markets. What tends to happen is we get a bit of a sell-off, at some point, and only time we're actually positive after we ended up getting the first Fed cut was 1980, where we didn't actually end up getting a negative market over the whole period. Even during the soft landing moments, we still saw pretty big corrections. So in 2024, do we expect corrections to happen in the market? Yes, we do. And remember, corrections aren't happening every year traditionally. Corrections happen once every couple of years, I think, statistically, because it's negative 10% or more. We've just gone through one recently. So the big hype that's going into the markets right now, could it continue? Stats would say it is very possible. Let's have a look at what's going on in just a moment. Just remember as well, US yields will show us the way, and we've already seen what we call a first time frame change of trend. So what's going on at this stage in markets? We saw a little sell-off. Of course, we know the stats technically point towards bullishness over the next couple of sessions for the Qs and for the market in general. But a lot of this has to do with that huge rally we saw only a week and a half ago. 7 days, I think it was like 8 days straight or something like that. But it doesn't matter whether it's 8 days, 9 days, or 7 days. We tend to lead into what we call a melt-up period, which is a dull, slow market that's unable to make a series of lower highs. So basically we get a high, a low, a higher high, and we never get that lower low. Now, that's what we're currently seeing in this market, a dull market. Very similar to Bitcoin if you want to take a look at that chart. There are some stats that you could look at saying, well, VIXpiration 7 times in a row, well, 6 times in a row, we've tended to see a little bit of weakness after VIXpiration, which happened last week. So if it's going to happen, it usually happens around now. And yeah, there are some stats going both ways. So of course you can interpret it. There's those periods. Here's Thanksgiving week on average in terms of what happens day by day play. Monday was not negative. Often it can be negative. Tuesday has been negative so far. Wednesday and of course Friday, technically they're the days that usually bring the green. So don't get too excited yet. We still need to see new lows on markets, and we'll talk about those later on today's video. Another thing that we're looking at is November market performance. What's going on? Well, usually, yes, if we've seen some weakness in pre-election years being these dotted lines, it's tended to be at the back end of this week. Now, of course, that wasn't with the same lead up. So I think that's important to note, but it still is there. Another one of the signs that we're currently getting that we might have seen maybe the topping of yields is the first outflows from Treasury funds. And you might say, well, why is that a good sign? Well, I've already marked this over on our X account, and I've said that it's actually a contrary indicator, like contrarian completely. Often when we do see these kind of sell-offs that are occurring here from big funds, it actually marks a huge difference. Now, remember Bill Ackman, that is, he just, I think, got rid of some of his Treasury shorts, and he almost timed it perfectly. Now, he was pretty well known for doing a pretty nice trade in 2020. Has he timed it perfectly again? We've been kind of suggesting that we maybe have just seen the low on treasuries, and we'll talk about that later with the charts. We also know from November 6th to 26th, we tend to see a weakness in yields. That so far has been playing out from a nice stat. So could we sell off? Well, the first one everyone's talking about is, of course, small caps. And look, hey, I'm a believer in small caps at a certain point this year. But the problem is IWM breadth has really increased, which is great, and it looks good on the surface, but was it too quick, too fast? We got that positive 5% day, which is not really the type of thing you want to be seeing. It's actually one of those outliers that tends to bring with it a little bit of selling afterwards. Now, we've noticed that when we get these breadth readings super high with these huge injections, there could be some weakness afterwards. And that would make sense to the Russell 2000, because if we think about it, that's actually what we see on this chart here as well. Remember, we are around here at this point in terms of chart. We're obviously near the end now of November. And if we've seen previous years, it's the middle of December that we often do see that low point for the Russell 2000. Could it be the same in 2023? It seems like it's likely, and we'll go through that because, of course, the Russell was the weakest of the technical charts, and it actually found a little bit of shorting over the last 24 hours. Let's discuss gold. Gold's doing really well. It looks poised to break to a new high and then maybe even a new all-time high. And of course, we've been bringing it up since this chart. And I know you're probably sick of it by now, but I like rabbiting on about things that I like. And yeah, since 1860 here, this recording, and even before this, we've been discussing the bullishness of gold. Now, most people hate gold. I totally understand why. It's been a pretty trash asset for a long time. but there are times that it can be decent. And this is one of those periods where I could even guess that it may go to a new all-time high. So what do you think in the comments down below? Will gold do well, or is it going to be smashed back down and manipulated to new lows? All right, let's talk everything to do with the markets right now, and let's talk about this earnings. Of course, John Deere, one of the most important for the agricultural sector. Will it do well? Certainly one to watch. And in terms of big dark pool transactions, I noticed that there was a large one coming through on the VIX. So this is interesting. A big trade on the VIX just before the Thanksgiving period, possible weakness around this area. Could be volatility set to come. Let's talk random options and what's going on in the market. We did see Tesla come through with a 2.4% gain. That was nice. No real weird activity there. But I think the big unusual activity was in one of the stocks that I've loved recently, which is, of course, Vail. Vail getting a monster amount of calls, 10.9 times average, up 1.4%. Look, that stock's already hit some of the key levels, but what an amazing move Vail has been. And I've been talking a little bit about metals recently and materials in general. And of course, iron ore has been a front and focus at this. A lot of people also starting to despair on PayPal. It just cannot give itself a break, down 2.8% on the session. But everyone's still talking about trading it. It's very interesting. In terms of unusual options activity, we didn't see too many big trades. But I wanted to just show you here the volume breakdown, just to show you that retail on single leg trader type options is now 23% of the options market. Now, I'm seeing a lot of retail traders in options, and it's interesting to see why you would do manipulation on a market such as this. 23% of the market's single legs are being traded by us. Well, that's pretty big. In fact, we're making up the same as professional and institutionals at this stage. When we talk about rotation, gold did the best, healthcare coming through, and a few others. And we mostly saw a defensive style session for the day, which is something that we will pay attention to. Remember, if we see +2 or +3 defensive days in a row, that usually means if that's coming with negative structure to the markets, they're about to drop the market pretty hard. We also look here at the last 5 days, and gold suddenly is the best performer over the last 5 days, followed by my other favorite index at the moment or sector, which is metals and materials. Not bad. I like that very much. Then we've got here financials, of course, coming through, and you can see the rest down below. So yeah, it's been a bit lackluster in terms of moves as we slowly grind higher, and that's about all we're doing. Let's move over now to the charts. First up, did bonds drop off heavily? They dropped a little bit, and we saw my favorite indicator here starting to weaken. It's obviously my custom indicator to do with markets and how we're seeing bonds. But usually bulls should be pretty focused on this and saying, you know what, from the bull standpoint, the bonds market is telling me that things are still looking pretty good underneath the hood. Advanced decline indicator showing huge declines across the board. Still a bit of a weakening market there from that particular indicator. Treasuries still driving higher, looking for that gap fill at 93. We'll see whether we can get that. Put call ratio stuck in the middle between calls and puts. And of course, high yield effective rate continuing to drop off. Now, for a bear, you need this thing to rise up, and it is just not doing so. So again, the bonds market, the yield market, still looking in the favor of the bulls. Dow Jones Transportation Average still looking pretty good for the session, but home builders did start to drop. We haven't gotten out of this trapped range yet. Now, that might tell us a little bit about the bulls and the bears. We have alerts on both sides. We're waiting to see the break there as well, to maybe give us further indication. In terms of central banks around the world, they just cannot stop having a party in terms of injections, and this is the big problem at the moment. You just got to think something's broken. We've got cuts around the world starting to happen. You've got the Fed kind of being confused in their statements saying, we don't know what to do, but we think that we're going to have to start holding it for longer. Yeah, you watch them panic if they have to panic. And already you can see that things are loosening around the world, especially from the world central banks, which you can see by this purple line. So big change there happening in the markets. Copper did pretty well in the last couple of sessions. Copper stocks had a pretty good session in the previous one. We've talked a lot about this, and we think it's kind of moving into a change of trend here. We already talked about it at 350, and obviously a break of this trend line was a big key. We're looking now towards copper potentially moving back up into the 390s, and that's going to be a relatively positive sign. The Australian dollar continues to do pretty well thanks to a lot of these things that are moving on in these markets at this stage. But I think the big thing that we saw in the last 24 hours has to be gold. Gold got past that alert that we set at 1994. It closed above and it looks poised to make a new high. Now, can it go for a new all-time high? Weekly closes will tell us a lot about this, and we'll end up watching it, and of course we'll update on this channel. GDX was the standout though from the sectors, and you can see here had a really nice session, still not above $30 and a bit, which we'll be looking at very, very soon. And of course, we'll be focused on everything that's going on here. You'll see it as an inverse head and shoulders. There's an island reversal. You know, we've been talking a lot about this GDX down at these levels for a while now. So having a nice session, not too bad. US oil, very tough to pick either way. I'm still looking for an 80 plus break. It does look like it wants to go bullish at this phase because it's just sitting here. I'm sure there's tons of shorters here trying to get involved in the short. Kind of looks like it wants to squeeze those out, but we don't know just yet. So, of course, we'll have to just see how that breaks. Tesla rallying up. I still call this a neutral chart to bullish because, of course, we did come off the low. Yes, you'll see the inverse head and shoulders, which is here. And yes, that would mean that you're probably going to around this price here. But other than just being neutral bullish, I can't see a short here for Tesla just yet. Let's move to Nvidia. So as we've talked about before, post-market, it is selling a little bit. Not huge, but selling a little bit. I would have liked it to rally a little bit more. But look, false kind of breaks followed by pullbacks to the middle of the range zone are actually quite common with Nvidia. Go back and have a look at your 2020 charts. You'll see what I mean. And I'm not really too scared about it. It was kind of something we also saw on Netflix. It's like I think a fairly common trap that tends to occur. IBB, no biotech, new high yet, still looking for a 120 plus break. This trend line obviously getting some respect. So we're looking for biotech to do well if we get rate cuts more around the world. Aussie market, it's stuck. You know, we're not breaking above 7150, nor are we back down into the 7,000 supports yet. So for the Australian traders out there, not too much to go with. Now, you would have noticed we put in a bit of information there about how many people were short in the DAX. And yeah, they've been short for a while. We've been updating on this. Everyone's been short on the DAX. And unfortunately, this is just squeezing the rubbish out of people. Now, is this a critical zone? I would say yes. But do you have enough to go off for a short? I would say probably not on at least the higher timeframes. As you break down, you'll see you're still making a series of higher highs and higher lows. That's not really a good sign for those traders. CQQ starting to look a little bit better. We've talked about this, and that's the Chinese tech stocks, and we've seen quite a lot of lows. I will say, though, everyone's talking about Barber. I've been looking at Barber on the chart. I don't like what I see. I don't know what you guys think. Put it in the comments down below. It looks trash still, unfortunately, from a technical standpoint. Let's move over to US 2000. Now, this is where we started to say right around 1800 that there could have been a shorter in here. It does look like there are shorters, and rallies could be met by shorts as well. 1800 is still the sticking point for the Russell 2000. So a level that we need to be watching. You can also see around here, we have that huge spike that might have tricked in a few people into going long. Maybe it's time to push them back down. Some big levels in the future will be 1720 if we do manage to get there. But keep your eyes peeled on the Russell 2000. It's showing some signs of weakness. Obviously, there has not been any stop loss runs on the top here of the 1830, and we have seen some weakness coming out of the small caps. The Qs did sell after making that new high. We can go down here to the 2-hour chart. Again, still technically it's in an upward trend. We know that there is strong stats saying that there's still a Thanksgiving coming. Maybe there's a little bit of selling early December. Maybe that's where the market starts to weaken a little bit. But at this stage, still higher highs, higher lows. Very tough to go against it. Here's the Nasdaq, and you can see it's still pushing higher even in after hours trade. Now let's move over to the SPX. This is the one that we've really been paying a lot of attention to. It's sold off, and it came into this structure. I like to think about it from this futures perspective. And you can see here that we've got 2 wick purchases. The problem is we know that's demand because demand led to a rally. So therefore, if it comes back into the demand, we have to think the initial reaction by people is going to be the buy, okay? That's the initial reaction. We talked a lot about 44.85. Unfortunately, that still remains really the biggest short level for a swing-based trader to really look for significant weakness. And really, it's just kind of a guess up here. You can see these buys, though. I wouldn't mind to see them get wiped off. then see a rally, that would then push. That would be an interesting one. And I'm looking a lot into this structure for buying potential. Now, it's just more of a short time frame. Obviously, if you're a bear, you just want that 44.85 to be broken and closed below. That's going to be pretty significant. At that point, you can start talking about your 4400s and your 4380s and hopefully getting that deeper pullback. We've got some green squiggly lines here that we'll discuss if needed, if that does occur. Now, why do we bring all of this up? Well, the problem is really in Bitcoin. You can see here is what we call a dull market. It looks ridiculous, but it is what it is. Very difficult to short. And you might say, well, look at this short, man. Look at this short, man. Sure, they did happen, but you also are technically, each time you get short, did you get out? Did you have a replicable system? That's the problem. This is just slowly squeezing people. And at this point, Bitcoin looks poised to try to go for that 38,000 and possibly pop to that 39.5 we've been talking about, or even the 46K. And as ridiculous as that might sound to a lot of us out there, that's the type of thing. Do not short the dull market. It's kind of like, very much against you when you're talking about statistics. Eventually you'll get it right, but you get brutalized inside of that. We also know Ethereum's kind of approaching that high. I'll just move over here so we can see the Ethereum trade. And it's struggling. So you can see there's some money coming out of alts. But Bitcoin usually leads. If Bitcoin breaks to a new high, then Ethereum generally will come after it, and it will go for this 2150 kind of breakout. But at this stage, just no signs. Now, Ethereum looks a lot weaker on the chart than something like Bitcoin, but I'm not sure we can take that as the lead because Bitcoin is technically the lead to this. When we go through the big news for the week ahead, or for the remaining kind of week ahead, we still have some other stuff, unemployment, obviously Euro PMI and all of those types of things. And then we have the flash services PMI from the US. But really the thing is here is we're going into Thanksgiving, and we know that that tends to bring a bit of cheer to markets in similar circumstances. And we have a currently dull market that's had one miniature sell-off. And that was really a sell-off for ants at this stage. We don't have enough technical reasons to really be against it just yet. I'm sure a lot of you are screaming at the screen saying, damn it, I want this thing to sell. Yeah, I can understand that. An unhealthy market is often ones that just go vertical. They come crashing down. And that's the type of thing that I'm sure a lot of you agree with, because we don't really, if you're a bull, you kind of want that 2 steps up, 1 step back. That's a beautiful market. That's the way you want to see things. Another thing that people are bringing up is the cup and handle, which I might even make the thumbnail of this video because it's so ridiculous. But everybody loves the cup and handle at the moment. We've seen it from the Bank of America kind of report. And what it is it's this. And you can see here it's like this. And then we have the cup handle. And then the extrapolation of that's like pushing into the probably 5,500 to 6K kind of realm. So yeah, I mean, look, this is what everyone's talking about, the cup and handle. It is technically, I guess, that formation. However, at this point, we don't really have a breakout to a new high. We'll talk about that when that happens. We do have a big rally here. The small caps are leading the way in terms of weakness. Russell 2000, the one to watch over the next 24 hours. And if you enjoyed today's video, make sure to subscribe and, of course, smash that alert button. Also, just a quick reminder, free VIP weekly newsletter, sign up. We'll get the new one coming this weekend. Thank you so much, everybody, for following, and we'll see you in the next video. Bye for now.